Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 30th of May 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's take a look at those overnight changes and price moves to be aware of. And a bit more activity, it's fair to say, among the major currencies in the Asian session and overnight. What we've seen, for example, is a bit of a pushback from the euro, trading up by 0.11% against the US dollar to trade at 111.4070 shortly before we recorded the video. Bigger gains for both the Australian dollar and near neighbour the New Zealand dollar, adding 0.23% and 0.26% respectively against the US currency, and this after some rather disappointing data out of Australia and a sort of double-edged sword from New Zealand, more of which we'll look at later on. The Japanese yen giving back a bit of ground against its rival, the US dollar. Dollar yen to trade at 109.70 shortly before we recorded the video, and the yen weakening by 0.11% there, but still below that key 110 level. The Chinese yuan was moving in the opposite direction as well to recent trends. The US dollar losing 0.10% against the Chinese currency. So for a firmer yuan, or at least a modestly firmer yuan, of course it's still well down on a monthly basis against the US currency. Our square dollar index broadly unchanged, easier by 0.04%, but no major move there from the US dollar. The other interesting moves, well, the South African rand managing to find a bit of gumption, a bit of fight back against the US dollar, taking 0.21% off of the US currency. And the standout move really, although I'm a bit of a loss to explain it, was a bounce in the Korean won, which has added 0.42% against the US currency. Can't be certain, but it suggests to me that somebody was in there supporting the won overnight. Let's see if that plays out across the rest of the session, or whether that was just localized activity. Okay, what's on the calendar? Events that may move the markets today. A reasonably busy calendar. We've already had building permits and new home sales data for the month of April out of Australia. To come this morning at 07:30 GMT, the first of the day's central banker speeches, this from the Bank of England's Ramsden. And then we pause until 12:30 GMT when we cross over the Atlantic for continuing and initial jobless claims data for the weeks of May 17th and May 24th respectively. At the same time, perhaps the pick of the day's data is released, this in the form of US GDP for the first quarter of 2019, a chance to see if US growth, we saw bumper numbers, didn't we, in the initial reads. Will those numbers be ratified with this second reading on first quarter GDP? We'll also see personal consumption and expenditures data for the first quarter out of the US, and remember that the US consumer accounts for as much as 65% of GDP, so how the consumer is performing and how much they're spending makes a real difference to the overall GDP data. At 12:30 as well, to complete the package, we shall have current account data for the first quarter out of Canada, a look at the government finances and how that country is doing relative to exports and imports of goods and services. Then at 1400 we cross back over the border to the USA for pending home sales data for the month of April. And at 1600, staying in the States, we'll have the second of the day's central banker speeches, this from Fed Deputy Clarida. We pause then until 6:15, 18:15 GMT tonight, and cross back into Canada for a speech from the Bank of Canada's Wilkins, and then a further break until 2300 hours. And at 1 minute past 11 we'll have GfK consumer confidence data out of the UK for May, and then at 23:30 we cross over the Pacific to Japan for April unemployment data, and at 23:50 we shall have Tokyo CPI, industrial production for the month of April. I should say that CPI data is for May, and then at 23:50 as well we shall have retail trade data for the month of April, including large retail sales. Okay, breaking news and comment then that's caught my eye overnight. And first of all, US and Asian equities have retreated once more on a cocktail of global trade and growth fears. Meanwhile, government bond yields have continued to fall among the leading economies, with many of those bond yields hitting new period lows, and some of those quite significant period lows as well. Australia's April building permits data fell by minus 4.7% month over month in April, versus forecasts for no change. This is the second month in a row that we have seen a negative number in the construction industry, or the building permits side of that anyway, and it's probably another body blow to, or a dent at least, to the Australian economy ahead of the RBA's next interest rate meeting. Staying in the Antipodes, New Zealand has unveiled what it's called a balanced budget, balanced in every sense, I think, in terms of not only the fiscal side of things, but also, as the government sees it, balanced among the wants of businesses and the consumer. But the government has also lowered its 2019 growth forecast as well, so it's quite surprising to see the Kiwi performing so well when growth has been lowered, but perhaps it's not as bad as people may have thought. Okay, food for thought then, something to take away with you into the trading day and beyond, and why not think about this? New research from the IMF has shown that clamping down on corruption improves government revenues and tax take, which can dramatically boost a country's GDP. In a recently published report, the IMF have highlighted Georgia and Rwanda as examples of this, and they saw 13% and a 6% improvements to their respective GDPs after a corruption clampdown. These things don't happen overnight, but the results do begin to materialise after a number of years. And the chart to the right shows basically where economies tend to sit in terms of the level of corruption and their level of tax take. Low income countries, unfortunately for them, tend to see more corruption and therefore less of a tax take. Advanced economies tend to be the least corrupt, and therefore, according to the IMF, their governments are able to secure more revenues in the way of tax, and emerging markets are somewhere in the middle. Worth seeking that report out. There's some quite interesting data in there, and it just shows that sound governance can improve the economic state of a country. Okay, it's risk warning time. Please do take a moment to read this risk warning, as trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, and as I say, do take the time to read this risk warning thoroughly. Thank you for your time today.